Today we will learn about IAS 10. Events after the reporting period. IAS 10 applies to annual periods beginning on or after 1st January 2005. This standard ensures that financial statements reflect all material information available up to the authorization date, improving reliability and relevance. IAS 10 prescribes how entities should adjust their financial statements for events that occur after the reporting period but before the financial statements are authorized for issue. It distinguishes between adjusting events, for example those requiring changes to the financial statements, and non-adjusting events, like those requiring disclosure only. In short, the purpose is to prescribe when entities should adjust financial statements for post-reporting period events, to require disclosures about significant non-adjusting events. Why it matters: it ensures financial statements reflect all material information up to authorization date. Now let's look into its main key points. Number 1. Events after the reporting period. Events occurring between the end of the reporting period and the date the financial statements are authorized for issue. Number 2. Adjusting events. Events that provide evidence of conditions that existed at the end of the reporting period. Number 3. Non-adjusting events. Events that indicate conditions arising after the reporting period. Examples of adjusting events. 1. Settlement of lawsuit confirming a liability existing at the reporting date. 2. Discovery of fraud or errors affecting financial statements. 3. Receipt of information indicating asset impairment at the reporting date. And number 4. Customer bankruptcy, if receivable existed at year-end. Non-adjusting events example. 1. Major business acquisitions or disposals after the reporting period. 2. Destruction of assets due to natural disasters. 3. Announcement of restructuring plans. And number 4. Significant changes in foreign exchange rates or asset prices. IAS 10 explained how to treat dividends declared after reporting period. It states that dividends declared after the reporting period are not recognized as a liability, since no obligation existed at year-end, and it must be disclosed in notes if declared before authorization. Going concern considerations according to IAS 10. If events after the reporting period indicate that the entity is no longer a going concern, the financial statements should not be prepared on a going concern basis. Disclosure requirements of IAS 10. Number 1. The date of authorization for issue must be disclosed. 2. Nature and estimate of the financial effect of material non-adjusting events should be disclosed. And 3rd. If no events occur, that fact should be stated. Summary of today's topic. Number 1. Adjusting events should be updated in the financial statements. Number 2. Non-adjusting events should be disclosed only. Number 3. Dividends must be disclosed, but must not be adjusted. And 4th one is, going concern basis reassess if needed. That sums up our today's topic. If you have any question, ask in the comments section.